An investor who claims to know everything is not a great investor. To be a good investor, it's as much about giving advice as it is about asking the right questions and guiding entrepreneurs and teams to go out and find the answers to those questions if they don't know them themselves. Start to build relationships with those investors early. I think it's really beneficial to start sending investor updates, whether it's on a monthly, a bi-monthly basis, even if it's fairly short, just saying, hey, here's what we've been up to.
On today's episode of Equity Merchants, my guest is Amee Parbhoo, the managing partner at Accion Venture Labs. Amee has had quite an interesting journey, living and working on 3 continents, and in this episode, she shares how that has influenced her work with founders. She also speaks about how to know a great investor, amongst other things. Now, let's dive in. So let's start from the top. On the personal note, can you tell us about yourself? Where were you born? Where did you school? And what was growing up like for you?
Yeah, happy to. And thanks so much for having me on the podcast. I'm excited for the conversation. My name's Amee Parbhoo. I'm the managing partner of Accion Venture Lab. And my backstory, I was born and raised in the United States, in the south of the US. But my parents are originally from India, and my dad grew up in Kenya. So I've always kind of grown up with family in all parts of the world, in India and Kenya and the UK, spent time traveling to those places. So I've always kind of, had a perspective of, what it's like growing up in those places, what some of the challenges are, and knew I wanted at some point in my career to be working there and helping kind of address some of the problems that I'd seen all through growing up. So I studied political science and economics growing up in undergrad in the States, and spent my summers working in microfinance and in rural development. So spent a lot of time in Southeast Asia and in Bangladesh with Grameen Bank, working and understanding what microfinance looked like. This was back in the early 2000s. And going through those experiences, realized from a career perspective, I wanted to have more of a business background. I wanted some skill set to offer and help organizations that were trying to address really challenging problems around poverty alleviation, around economic development. I had a chance to see these organizations very, very early in my career in different parts of the world, but didn't feel like I had, necessarily much to offer. So right out of undergrad, I went and worked for McKinsey in the States, and felt like consulting would be a great place to really learn how to tackle big challenges, big problems. And I love that time. I love that experience, getting to see very different, industries, work with super smart people all over the world. And did that for a few years, and then realized also I wanted to get my hands dirty. I think you hear this from a lot of consultants, that it's one thing to advise an organization, it's another to actually be in the trenches and build something. So I moved to India and worked for what was then one of the biggest microfinance institutions at the time. It was called SKS Microfinance. It ultimately was the first microfinance institution in India to go public. So I was there prior to the IPO, working on essentially building new loan products, saying, okay, now at that time, SKS had 8 million customers around India. They had branches, loan officers spread across the country. That could become a very, very powerful distribution network to give all kinds of other products, whether that's, financing for mobile phones, financing for solar lights, mobile banking, all kinds of new things. This was, again, early 2000s, so early in the kind of tech revolution in financial services. And so it was incredibly exciting to say, okay, how do you launch these products? What does a sales process look like to launch a new lending product? And I love that experience, and spent a few years doing that, as well as working on the IPO. And I think that was my first taste of the investing side, and seeing what it's like and what the kind of the value proposition, the needs of an investor on the other side of the table in one of these companies would look like. So anyway, I could keep going, but basically then came back to business school, worked for a number of fintech companies in Kenya, in the US, and Latin America, and realized I wanted to kind of explore what it's like to be an investor. So came to Accion Venture Lab, where I've been for 8 years now, working in really early stage fintech. So we invest in fintech companies globally, all pre-Series A, and all with an inclusion angle. So for us, what that means is a real focus on serving underserved consumers, small businesses in those markets.
Okay, so you've had quite an interesting journey and you've been at Accion for 8 years. That's a very long time in these times where people basically spend less than 3 years at organizations. Why have you stayed that
Yeah.
long?
Yeah, it's the longest place I've been in my entire career. And yeah, when I joined Accion, I mean, really my goal was more as wanting to be here. I thought a few years to help me get a better idea of what business I wanted to start. So I had always thought I would become an entrepreneur myself and worked on a few business ideas earlier in my career and always had this nagging sense of I don't know if this business is the right. I don't have a gut feel of whether or not I think the business I'm working on will succeed. And that's why I came to Accion Venture Lab really in the early days was saying, well, what better way to figure out if I can develop that gut feel and become an entrepreneur than seeing hundreds of businesses and having to make an investment decision. So that's what initially brought me here. And I think what's kept me is just the excitement, the energy I get from working with entrepreneurs every day. We've made over 60 investments to date, and I just find the entrepreneurs in our portfolio incredibly inspiring, thoughtful, very intelligent. They're a joy to work with. And I think, I've kind of found a spot where I feel like I can create a platform to help them, to support them in growing what they're doing, bring other resources, whether that's capital or outside of capital support to make them successful. And so I love the work we get to do. And I think that's what's kept me here for so long.
Interesting. So you've had to move around a lot in your career. So you've basically worked in at least 3 continents, and that brings a lot of experience and maybe perspective, especially regarding how cultures affect businesses. How would you say this experience has impacted your work as an investor?
Yeah, I mean, I think the main thing, and any investor who's, formerly been an operator or worked at a startup knows you can't know it all. Like an investor who claims to know everything is not a great investor, right? It's sort of, for me at least, recognizing where I can support, where I can bring the value, the learnings from, for us, seeing fintech globally, where I can bring those learnings to support an entrepreneur. But I'm not going to fly into Nigeria or Egypt or Indonesia and claim to know everything about local market context. Now, we've done enough investing in those markets to know enough, but I think it's really to be a good investor, it's as much about giving advice as it is about asking the right questions and guiding entrepreneurs and teams to go out and find the answers to those questions if they don't know them themselves. So recognizing how important local market context is and culture is, yeah, absolutely. Working in India versus in Kenya versus the US have been very different environments.
All right. So I was going to ask, so in your day to day as a managing partner, what does that look like? So what does your role entail? And what's a typical day for you?
Yeah. So at Accion Venture Lab, like I said, we're a global fund. There are 13 of us on the team working around the world across Southeast Asia, Africa, Latin America, and the US on investments. What's exciting about my job is that, no single day is the same, right? Like every day, it could be a lot of different things, whether it's supporting on portfolio management, diligence on a new investment, building out our investment thesis in a new area. And so it's a mix of lots of different things. I'll tell you this past week, just as an example, I've spent a lot of time with some of our portfolio companies, especially in this market environment. There's, of course, a lot of time spent on making sure our companies have enough money, that they're hitting different metrics and KPIs that they need to get to that later stage of funding in the year. There's tough decisions being made around focus areas, around team. So there are a lot of conversations I've been having on the board level for our portfolio companies. On the pipeline side, we're evaluating a new investment in Latin America. And so spent a lot of time with our investment officer in the region, thinking through the diligence for that, digging into the unit economics of the business, talking with investors, current and the ones that are looking to come alongside us in the round, to really define what our thesis would be and whether or not we'd want to invest. And so that's been really exciting to do. And then the last thing I'd say is we're spending a lot of time on kind of refining our thesis as a fund. We do quite a lot right now in embedded finance. And so what that looks like is both enabling technology that's going to kind of empower platforms and other providers to bring in financial services, but it also could be new marketplaces that are not only providing non-financial services, but also financial services. And we're digging into sectors that we think are really exciting for embedded finance. So just this past week, we've spent a lot of time talking about climate and climate fintech. What are embedded solutions to help drive better climate resilience, especially on the continent in Africa, but all over the world? So those are really exciting conversations to say, okay, let's really think about what we're seeing, but what we'd want to see. Oftentimes we're investing in spaces, innovations that, I can't map out on a piece of paper, the 15 different companies already working in this space. Those companies may not yet exist, but how do we have a perspective on what we would like to see and help drive toward that? So that's the piece of the job I really love as well.
So, how are you helping portfolio companies get through this period of economic uncertainty and economic downturn? What are you doing to help them get through?
Yeah, we've been investors for 10 years, been making investments through challenging times. This is one of those challenging times. And I think it's really now helping our companies, many of whom have not seen these kind of challenges yet. They've kind of gotten started in times where the markets were great. There's a lot of venture money. You can raise very quickly. So it's sort of helping our founders and our companies readjust to this new reality. So what that looks like from a management perspective is a couple of things. I think it's number one, understanding current situation on the ground. How much cash does a company have? How much runway does that give them? And is that sufficient when you line it up against the KPIs, the milestones they need to hit for that next round of funding? That math and that kind of lining up is critical, because if you basically say, great, I have 12 months of runway, that's going to get us to a Series A. Well, what exactly are you planning to achieve by the end of the 12 months? And actually, it's not that 12 months. It's, let's say, 6 months from now, because we know it's taking longer to raise money, especially if you're raising a Series B, a later stage round. So really, it's about where will you be in 6 months in order to go out and raise that next round? And if those metrics aren't, what you need to be attractive, whether it's $1 million in ARR, or it's a certain number of customers, or it's a certain GMV, whatever those metrics may be, then I think the conversations becomes, okay, well, how do we extend runway? Or how do we hit targets more quickly? Or how do you focus? I think that's one area. From becoming a seed company into a Series A in particular, we find that's the time where you're not necessarily doing lots of different things and testing out what sticks, but you're sort of saying, okay, we figured out what stuck to get to our seed round. Now, here are the 2 to 3 things we're really scaling and we're going to show as the core of our business. So those conversations become a lot more of what we do working with our portfolio companies, again, really to make sure that they have enough money to prove out what they need and they're going to be successful to raise their next round of funding.
Okay. So usually in Africa, one of the stories that fintech startups tell, especially when reading, is that they are broadening financial inclusion. But there's also the social aspect of the benefits that we can see with startups. So a startup, for example, that's providing lending services could be doing that, especially in a place like Africa where most of the population, they don't have access to credit services. So a startup doing that could, beyond just giving people money, they could actually spur economic activities in a certain areas. So how do you think fintech can improve economic and social outcomes for women, especially in Africa?
Yeah, I mean, first of all, the reason we invest at Accion Venture Lab in fintech and financial services isn't just for access to financial services, right? I mean, that isn't the end goal. For us, it's exactly what you're talking about. It's about economic resilience, economic prosperity, economic growth, and financial services are fundamental to making that happen. So when you talk about a woman, take one of our portfolio companies, Pula is an insurtech company providing, insurance, crop insurance, yield insurance to smallholder farmers. A lot of those farmers are women. And part of what enables those women to be less susceptible to climate shocks is access to insurance that will help protect them. So again, the insurance is fundamental, but really what the end goal is better protecting livelihoods, better driving to more stable income going forward. So I guess number one being, it's not financial services for financial services sake. That is the end goal, is economic growth. Now, when we look, especially on the continent, and we talk to a company, we have a pretty clear impact screen that a company goes through first. And it's fairly straightforward. We want to understand who's the customer that you're trying to reach. Is it an underserved customer? So whether it's a lower income consumer or it's a small business, we want to understand who's your customer, and do we feel like that's core to who you're trying to serve. The second piece of it is not just about who you serve, but how you serve them. We want to understand the product, and we want to understand how that product is affordable and fair and responsible. And that hasn't always been the case, right? I mean, when you think about lending businesses, nano lenders, digital lenders on the continent and across the world, oftentimes APRs are really high. There's no consumer protection, data privacy. There's blacklisting on credit bureaus. There's all kinds of negative repercussions that come from that product. There isn't transparency around pricing or what the product is. That's all fundamental for us in order to drive better products on the continent for the underserved. So it's not just about who, it's how that product is offered. And that's what we spend a lot of time on. And then it's the team. I mean, you don't need to be an entrepreneur that's saying, look, I am all about social impact. Like, that's number one for me. But it's less about those words and more about how you operate and what drives you as a team. That's critical for what we look for to invest in. And I think all of those elements then line up to better financial products that serve customers, like you said, like women who are traditionally underserved, especially by digital financial services. We're looking for entrepreneurs and models that are creatively thinking about those customer needs and meeting them in a fair and responsible way.
Okay. So where do you feel there are opportunities or the path for growth lies for fintech startups in Africa?
Yeah, I mean, I think there's a couple of areas. First of all, what we're seeing is a clear move around not necessarily B2C models, directly reaching consumers or small businesses, but instead B2B channels. So we're really excited about businesses that are embedding themselves into supply chains, are thinking about other ways of acquiring customers. And when you think about the path to scale, I think that's going to be the most powerful way for fintech founders. So we have a company, I'll mention two companies. One is called Field Intelligence that works in Nigeria and Kenya. They're an embedded kind of software as a service platform for pharmacies and health clinics. And what they do is embed themselves really in the supply chains of the pharmaceuticals. In that way, they're able to reach lots of pharmacies, lots of clinics, and provide a much more sticky product to those customers than if they were to kind of directly go out and have social media campaigns and reach customers without those linkages in the supply chain. The other company I would mention is Lami, which is working out of Kenya, but across a few other markets. They're an insurance as a service model. And so they're, again, working through platforms and other businesses on the continent and providing then insurance through those companies, either to customers or to employees, other parts of the value chain. That's how you're going to access scale at a much lower cost of acquisition and be much more contextualized in the way in which you deliver financial services. Insurance, for example, is a very difficult product to sell, but if you can make it really understandable and suited to the instance at the moment that someone is making a purchase or doing a delivery, it's a far easier decision to make. So those kind of models that are contextualized, are built into B2B channels, I think have a real path to growth and scale.
So considering the similarities between many Asian countries and Africa, what are some lessons you think that African founders can learn from founders in these regions?
I think there's a lot of really exciting crossovers and learnings between all of the different continents. And I don't mean just from Asia to Africa, but also Africa to other regions. And that's really what we spend a lot of time working with our portfolio companies and sharing what those learnings look like. I mean, I think, again, one big piece that we're seeing exciting in Asia, kind of companies that are a little bit more scaled than in Africa, is these sector-specific verticalized fintech plays. So how do you very much understand the construction space or the agricultural supply chain and build financial products that are truly contextualized and relevant to those customers? A lending product for a subcontractor in the construction space looks very different than, a retailer who's selling fast consumer goods in the consumer space, right? So a subcontractor may need lending against invoices that they have on a job with a builder, and that might be a 3-6 month loan product. A retailer, it may just need 1 week financing for their inventory. So again, I think that that's something we've seen in India and Southeast Asia take off, are kind of these platforms that have truly scaled within specific verticals and provide those contextualized lending products. And I think that's one area we're quite excited about seeing on the continent. The other piece in India, which has obviously become the bedrock and given so much of the foundation for innovation, has been UPI, the digital rails that exist, the access to accounts at a much kind of faster, more seamless way. And that enables a lot of fintech innovation to be built on top of it. We see parts of that on the continent in different forms, right? You have mobile money in Kenya. You have various other plays that are kind of coming up. In Nigeria, there's a clear move toward agent banking. There's a lot that's happening to digitize. But I think that becomes a piece that I really hope there's more learning coming from Asia onto the continent to create those rails and create ways in which, there's broader access and opportunities for innovation on top of it.
Mm-hmm. So finally, what would be your tips or your advice for founders who are looking to raise funds around this period, or who are just starting out and they're hoping to raise funds over the next few months?
Yeah. A few things. Number one, I would say, is start to build relationships with those investors early. For us, we can come in pre-seed, seed, pre-A companies, but we like to know our founders well in advance. We like to have a few months at minimum, seeing how they're working, having conversations. I think it's really beneficial to start sending investor updates, whether it's on a bi-monthly basis, even if it's fairly short, just saying, hey, here's what we've been up to. We just got this license. We just hired this great person on the team. And here are some areas we need of help. Start doing that now. I think that gives you're just more top of mind than when, call it in 6 months, you're going out to raise money. The second piece of advice I would give is always be looking to hire and strengthen your team. And obviously that can be difficult when you don't have a lot of money in the early days, but especially in market environments like now, people are looking for new opportunities. They're looking to build something. It's an exciting point, I think, for African tech in particular, where there are a number of larger successful companies. And oftentimes those early employees at those companies are saying, well, now I want to go back and do something at the early stages again. I want to either start something on my own, or I want to work with someone and build something. So try and network, try and always be building that. Those are where the best hires, the best ways to strengthen your team, the best ways to find advisors can be. And so I think that's really critical. And then the third piece of advice I would give is be close to your customer. In the early days, everything changes, right? Like, you think you have a business idea and you think you understand the needs of the customer, and then you go spend a month living in the community that you're trying to serve and seeing day in, day out how a customer engages with your technology or engages with your product, and you get a realization of what the real need is and what a change might look like. And that's completely natural at the early stages. That's expected. And so I think be open to that, be adaptable, be flexible, and be close to your customer, because that's where, this is the moment to learn what's relevant. And as seed investors, that's what we want to hear from our founders. We want to hear that they can basically be the mouthpiece and the spokesperson for what their customers need.
All right. Thank you so much. This was very interesting. So thank you so much for your time.
Yeah, of course. Thanks again for having me.